This is your LMAX Exchange Market Insights technical update for Tuesday, August 2nd, 2016. Euro dollar. So the euro continues to hover around the 112 area after the market broke through 111.87, which was a key top, but it was unable to establish above 111.87 in Friday and Monday trade. At this point, there is risk for the market to once again stall out around 112 ahead of a resumption of declines back down towards key support at 109.12. But there's a question mark here because if we do establish back above 112, this will open the door for a more significant upside, exposing the 1428 high that we saw back on the 24th of June. Sterling dollar. So cable continues to consolidate off its multi-year plus 30-year low from a few weeks back post-Brexit, with that market trading down to as low as just under 128. At this point, the sideways trade that we've seen is classified as a bearish consolidation, and this could set up the next potential downside extension back below those recent lows and down towards next key psychological barriers at 125. But even if we do see corrective upside, the market retains its downtrend and remains firmly locked within this downtrend while it holds below 138. Dollar yen. So dollar yen has recently stalled out with a sharp reversal in the previous week. This sets the stage for the next lower top at 107.49, that high that we saw back on the 21st of July, ahead of the next downside extension to be confirmed on a break below 98.99, the current 2016 low from the 24th of June. Euro Swiss. So over the past several days, Euro Swiss has been confined to a rough range between 108 and 110, and it's going to take a break on either side for clear directional insight. If the market establishes back below 108, we could see a fresh downside extension towards next key support in the form of the 2016 low at 106.23, while a break back above 110 will do a good job of opening the door for a push towards range highs in 111.30. Aussie dollar. So Aussie has seen a nice little rally in recent trade, but market continues to stall out above 76 with a potential lower top now in place at 76.77, that high that we saw back on the 15th of July. At this point, look for deeper setbacks back towards medium-term support at 71.45 with only a break back above 76.77 to compromise that outlook. Dollar CAD. So dollar CAD has recently broken out of a major base after breaking above 131.89 in the previous week. And so recent setbacks are viewed as corrective, with the market seen putting in a higher low ahead of the next upside extension beyond that high that we saw last week, which came in at 32.54 and towards the 135 to 140 area further up. At this point, only back below 128.50 would compromise the constructive outlook. Kiwi dollar. So Kiwi rallies continue to be very well capped, with the market recently putting in a 2016 high at 73.25 and continuing to stall out into rallies. At this point, look for deeper setbacks over the coming sessions, with the bearish bias to be confirmed on a break below 69.52. SPX 500. So the S&P 500 continues to consolidate off record highs, with the market putting in yet another record high in Monday trade, all the way up to about 2183. But the market continues to show signs of exhaustion, and if we see a close back below 2150, it will do a good job of alleviating immediate topside pressure and accelerating declines. At this point, though, while we hold above 2150, there is risk for a fresh push to 2200. Gold. So gold remains highly constructive, with the market once again being supported on dips, this time ahead of 1300, as it looks to put in a higher low and confirm that on a break to fresh 2016 highs beyond 1375 and towards the 1400 to 1450 area further up. At this point, only back below 1300 would compromise that constructive outlook.